Thank you for checking out Real Talk Personal Finance. Shit's about to get real. Cashflow King with you today. And today we have a very special and a little bit of a different episode than we've done previously in the first 3 episodes. We do have our first guest today, good friend of mine, former financial advisor and current accountant. Before we introduce him, real quick announcement. We are going to be compiling a list of questions for anybody that has any personal finance questions that you may like answered on the show. Just a quick reminder, this is going to be for entertainment and educational purposes only. We do not give advice on the show. We are strictly here to entertain you. And so if that's something that you're interested in and you would like to submit a question to the show, please feel free to send an email to realtalkpersonalfinance@gmail.com. That's realtalkpersonalfinance@gmail.com. You can use your real name if you want to. We won't read your last name, so you don't even have to send that. Or if you want to have a little fun like we do, feel free to use a fake name and have some fun with it. So with that said, and without further ado, please welcome to the show, Cube Crusher.
Well, thank you very much. Good to be here. Good to be here. It's a good day, and I'm here to drop some knowledge bombs.
Well, we appreciate that. I think our listeners will appreciate that. I'm sure they're tired of just listening to me talk about different topics, so it'll be nice to have a little bit of dialogue today. The title of today's show is Retire at 40 with 5 Principles. And for those that aren't familiar, 5 simply stands for financial independence. I want to say that this podcast is a personal finance podcast. It's not necessarily a FI, or as some people like to add in the last 2 letters, FIRE, for financial independence, retire early. It's not necessarily a podcast all about that, although we do use certain principles from the FI and FIRE community. But I thought it would be helpful for everyone to kind of hear from somebody, and we'll get into his story here in a minute, that is pursuing financial independence. And he'll talk a little bit about his backstory, his why of why he's doing it. I have a few bullet points in the outline here that we'll ask him about some different aspects of that. And just, as the name implies on the show, this is Real Talk Personal Finance, where we just tell it like it is. So you probably saw the little E for explicit rating. I talked to Cube Crusher before the show and told him he can let loose if he wants to within reason. We don't want F-bombs every other minute, but if appropriate, we might throw some in there for you. So with all that said, and without further ado, Mr. Cube Crusher, please give us your backstory and talk to us a little bit about what you're trying to achieve.
Well, a little of my backstory would be, unfortunately, I didn't grow up rich and I didn't marry rich, so I have to find another way to get rich and not have to work anymore. Did all the normal stuff, went to school, went to college, got a degree, then got a graduate degree as well. And like most other people realize, I didn't learn jack shit about personal finance whatsoever within my, 13 years plus 19 years of education total, I guess. They teach you pretty much nothing about how to live your life and manage your money. So let's see, after I graduated with my master's degree, I did become a financial advisor, a licensed financial advisor, and worked with some clients and saw that, there's several people out there that more or less are struggling, aren't going to have a pot to piss in retirement, as unfortunate as that is to say. And I guess that's kind of how I started viewing investing, is I didn't want to end up like those people, like the I guess norm is of people spending all the money they have, not saving, working their 30, 40, 50-year career or whatever it may be, and then finally, calling it quits at that point and hoping that they have enough money to retire on. My goal was to kind of start saving, and then as I got further into, learning about personal finance, ways to save, different strategies that can be used, I started even saving faster because, my goal is to not have to work. I can work if I want to. As I've always told you and some of my other friends, that, my ultimate goal is to maybe push carts at Costco, because I think that would be fun to do because I love Costco.
Yeah, and anybody that's never been to Costco, get you a chicken bake. All right, they have some pretty good pizza, but the chicken bakes are bomb, and they're pretty affordable. I think it's like $3.19 last time I went there. Anyway, anytime I get to fill up, even if I don't have to go in for a whole big shopping, I always like to get a quick chicken bake and get a swipe in at the front there. So just shout out to Costco, not a sponsor of the show, maybe someday. Anyway, continue.
Yeah, yeah, no free ads. Um, so that's kind of how I started. And obviously I learned more about finance and investing as I was studying, getting licensed as a financial advisor. I believe, my first investments, like most people, was a Roth IRA, and I know that you had a show that was all about that, so I'm not going to go on about it. That was probably back in my early 20s, I guess, when I first started my career, a little bit older now. And after that, I've kind of always managed my own investments because I find that interesting. So within my Roth IRA, and this is not investment advice, disclaimer, do your own thing. Like most people just starting, I was going in there, I was buying some stocks, I was trading some options, which I probably shouldn't have been doing at that point. But that was kind of my beginning, I guess, in saving and in my own finance journey. And then as my career progressed, obviously I started making more money. I did get married at some point within that time frame of my 20s, towards the end of my 20s. I think I'd probably worked several years and had some money saved up before I was married even. And then from there, we've just kind of, my wife is on board with the savings part, keeping our expenses relatively low and trying to save as much as we can because, as my name says, I want to crush the cube. I want to get out of that life of the 40-hour work week.
So just to set the stage and the reason, we came up with the name Cube Crusher. Currently, and you don't need to give too much detail, but I think it's safe to say, work in a position as an accountant where your time, for lack of a better phrase, is essentially controlled by an employer. You have to be at a particular location from time A to time B with a little bit of a break for lunch. And while you seem to be earning good money doing that, it's something that it's a means to an end. It's not something you want to do for the next 40 years. So that's the thing. But is that a fairly accurate statement that you kind of quote unquote work for the man right now?
Yeah, oh, absolutely.
Okay. And so that's part of your motivation, right? I'm sure, maybe you look around at work and you see people that have been there for a fair amount of time, potentially decades, and it's kind of like, all right, like, how have you guys not figured this out yet? And I think that's like the $1 billion question for a lot of people. It's like, okay, well, I have to go to work, I have to get a paycheck, I'm supposed to work until I'm 65, 67, 70, and the numbers seem to be continuing to increase. But in reality, I think you figured out that it's essentially just one big math problem, right?
Yes, I would agree with that, and I do every day that I'm in the office and walking around. Like you mentioned, I see older people there, and they may be there because they love their job and they love showing up to the office every day, and they have for the past 20 or 30 years. But that's not something that I guess I'm interested in. And yeah, like you said, it just kind of comes down to basic math of here's how much money I make and here's how much I spend. I guess as far as income for our household, we don't set the world on fire or anything like that. We are in six-figure territory of combined income. Expenses, quite frankly, most people tell you to track them. I honestly don't believe in that. I kind of just go off of, well, I look at the credit card bill at the end of the month. Obviously, I have enough money to pay it, and just kind of go with that. I don't like to set myself into a budget saying, oh, no, I can't go, get drunk one night if I want to because I don't have money in my budget for it. So I think roughly we probably save, I would guess around probably at least 50% of our income. That's probably a little bit of a conservative estimate, but I think that was kind of how we started building it. And then as the years pass and you continue to save, obviously we've started to see the snowball effect of our savings.
All right. So first thing, let's back up for a second. And I really like what you said because I'm kind of sort of the same way. Although I do track expenses, I don't have a quote unquote budget per se. Is the name Cash Flow King would probably tell you. I refer to it as a cash flow statement. But really, what we do is we track expenses and, to your point, essentially come up with a savings rate, which everybody defines differently, and we won't get into the rabbit hole details on that. But essentially, I don't want to put words in your mouth, but correct me if I'm wrong. The most important thing to you, so far, it seems like it's all about balance, live your life, spend money on what you want to within reason, but really you have a sort of an aspirational savings rate, and your month-to-month expenses, if you're plus or minus a few dollars for wanting to go out and get smashed or something like that's not a big deal because you've taken care of the bigger things. So you are tracking a savings rate, but you aren't necessarily tracking expenses or coming up with some sort of boring budget. Is that a fair statement?
Yeah, that is correct, and I guess kind of the big line items that most people are going to have as far as expenses is going to be your house, your car, and your food, or whatever you decide that you want to eat. So as far as our house goes, obviously I have a house payment. It's probably, oh gosh, I would venture to guess maybe 15% of our income monthly, somewhere around there. And I know that different places online give you different numbers of what that percentage is supposed to be, but I don't really go by that either. It's just the house that we wanted. And it happened to be whatever price that it was, and we could afford it. It wasn't a thing that, we went to the bank and said, how much can we afford? And then went that expensive. We knew what we wanted, so we purchased it that way. And, it was ended up being pretty affordable what we wanted. As far as transportation goes, we have zero car payment. I actually drive a car that is for almost 15 years old now, I think. It only has 98,000 miles because I don't drive ever. I believe that, I don't even think I've driven 3,000 miles in the last year. My wife's got a little bit newer of a car. It's probably 7 or 8 years old, but that's a place that we save a lot of money because I don't give a shit about cars, quite frankly. As long as it has four wheels and can get me from point A to point B, I don't care about much else. And then, if you factor in the all-in cost of a car, once pay for your registration every year, your insurance, etc. I mean, my car is basically worthless to anyone in the world except for me. So, that's kind of an area where we're probably beating most people because most people keep a car payment. My friends that I see, they're like, oh, they'll have a new car, within a year or two, and they'll be like, well, I traded my other one in, and the payment stayed the same or went lower. But yeah, you're going to have that payment for who knows, 5, 6 years. So that's kind of an area that we save quite a bit of money on with no car payment. I mean, the taxes are super low, the insurance is super low because people are probably afraid when I'm driving around because they see my car and they know that if I get hit, I don't care. Like, and it gives me a peace of mind too as far as that goes. And then, with food, we eat out, we get groceries. Like I mentioned, no free ads. I love Costco. We'll buy in bulk there. I think that probably saves you money, but it's not something that I track whatsoever. So those are kind of the three big areas as far as everybody's expenses go, and we kind of manage to keep those pretty low, which leaves us with more money to do whatever the hell we want, on the weekends or during the week.
Yeah, I think I read an article not too long ago, something about the average car payment was something ridiculous, like 560 some dollars a month or something like that, which if you need to have a car payment for a period of time, everybody's approach to that's different in terms of, do you pay cash? Do you not pay cash? We'll save that for another episode. But if it's something where you're going to keep that car for 10, 15, or however many years, and you need to have a payment to get it initially, okay, fine. But to your point about some of the people that you see that it's the perpetual car payment, and it's just really, that's, I don't want to say that's what keeps people poor. Maybe that's, I'm not trying to make fun of anybody, but, and I don't know who you're talking about specifically, but I think for most people, it is that perpetual car payment that prevents them from being able to do some of the things that you're talking about here, which essentially is shaving off potentially a couple of decades of mandatory work. That's pretty powerful. And if you presented it that way to a lot of people, would you rather have the nice fancy car with a car payment every single month in perpetuity, or Would you rather retire 15 to 20 years sooner? If you put it in that context, I think more people might seriously consider whether or not they want to continue to have those fancy and big ass car payments, right?
Yeah, I mean, exactly. I think that that's American consumerism at its finest, is cars. And I know that it seems to me like with my friends, and I'm sure other people, it's the case too. You know, you go into the dealership to get your car worked on, and then all of a sudden you're sitting there, and then the salesperson comes over to you and says, "Oh, hey, we can do this, this, and this, and your payment's not going to change." And then you're like, "Oh, all right, well, yeah, whatever."
Yep. If you can afford the monthly payment, supposedly you can afford it, and there's other people on the other side of the spectrum that will tell you if you can't buy it twice, you can't afford it. Buy it twice in cash, that is. All right. So you mentioned 50+% savings rate. And when people hear that, they're probably a little bit curious. One of the bullet points I had listed here, and I know you're a really big proponent of, given your background and your current occupation and just the way you think about things from a strategy standpoint, is optimizing taxes. So when you talk about the savings rate, explain for the listeners, where does that money go? Not investment specifics, but types of accounts, how that the taxation might work on that, sort of the asset location, and then your reasoning for putting certain amounts of money in different pots, if you will. Can you go through that?
Yeah, so I currently, all the accounts that we have, me and my wife both have, employer sponsored plans at work. We both have Roth IRAs, we both have traditional IRAs, we have a joint brokerage account. I have a separate brokerage account of mine that's a whole nother story of how that came about, that I can go into if you want me to.
You can if
And
you
then,
want at some point, but yeah, it's a little advanced for
um,
today's show. Just suffice it to say, he does some crazy
yeah.
shit in another account, and we almost didn't use Cube Crusher. We almost used a different name for him because of that. But yeah, maybe we'll table that for now.
So I have that, and then there's a couple other accounts that we have out there, and then obviously our general savings account, or not savings account. I use checking account. I don't even know why their savings account exists because they give you no savings rate anyway. So most of our savings, I guess, on a yearly basis is going into employer sponsored plans. Most of it I do put in pre-tax plans. Well, all of it that I put through employer sponsored plans is pre-tax money. The reason that I do that is to, obviously, it helps save on taxes now, and you have to pay taxes in the future. And I know that people get all bent out of shape, and think that you should do a Roth if your income's low enough. I guess I'm in a slightly different camp, that the last dollar that's being added to your income is the one that's coming off the top tax free. So really it comes down to what your actual tax bracket is. And my hope is, or my plan, I guess I should say, is that once I'm in retirement, to be able to get these pre-tax dollars out while I'm in the 0% tax bracket. And essentially, the pre-tax bucket turns into the same thing as a Roth bucket, actually better than a Roth bucket, because I'm never taxed on it going in and I wouldn't be taxed on it going out. Obviously, there's a lot of planning that's going to have to go into that, towards the end, or when I'm in the distribution phase. But that's my current thinking. I know a lot of people say, well, tax rates are going to go up. Yeah, they probably are. But the 0% tax bracket is always going to exist. So I focus that money on pre-tax, and then obviously maxing out a Roth IRA every year. I just think that that's something good that everybody should be doing, because I know, similar to what you mentioned on your emergency fund episode, was, you always have access to those funds anyway that are in a Roth if needed. I'd rather have $6,000 sitting in a Roth account and $500 in the bank than, $6,500 sitting in a bank account.
That's
And
a
I know
good
that,
point. I would say, sorry to interrupt you, but it's almost counterintuitive, I think, for most people, because there's a lot of people out there that will say, well, you need to have so much in emergency fund savings, and we won't rehash the whole episode, but that means different things to different people. And I don't think enough people realize the power of having your contributions in a Roth IRA. But that is an interesting point. And one thing I want to say real quick before I forget, if you can touch on as part of your answer here, the importance of, in your opinion, not necessarily having all your money stashed away in retirement accounts and how that plays a role. So please continue.
Yeah, so we have the Roth there that we're maxed out, so that does give us some tax-free money in retirement as well from coming in the Roth account. So it just gives you some, I don't know, I call it tax diversification. I have a pre-tax bucket, I have a Roth bucket, I have an after-tax bucket. The after-tax bucket is a brokerage account. I don't have any set amount that I put in it every year. If the bank account starts going too high, I have, I'll throw money into the brokerage. And personally, talking about the emergency fund, I used to be one, like you mentioned, to keep several months' expenses in an emergencies fund, but I've since kind of changed my view on that, and I like to make sure that I'm getting money invested as much as possible, as quickly as possible. So putting money into that brokerage account, can kind of serve as part. I mean, it is an emergency fund too. If there was an emergency, I could cash it out tomorrow and take all that money and do whatever the hell I wanted to with it. And I've started building that up, and my plan is to build that up a little bit more in these next 5 years, 6 years, because like you mentioned, that is not stuck in a retirement account. That is a brokerage account. I can get that money whenever I want. And that's something that I'm going to need to have if I plan on, quitting work earlier or before 59 and a half when I have no access to retirement funds. So right now I'm kind of focused on that point because for the most part in my retirement accounts, even if I assumed I never contributed again, which obviously I'm going to continue to contribute, I think that over the next 20, 30 years that those with market returns will be able, enough to give me enough money once I reach retirement age. Another thing that a lot of people don't really talk about is even, if I have money in my 401k and too much in there, what's the worst that can happen? I mean, I can take it out and take a 10% tax penalty. Well, nobody likes to do that, but it's still there and you can do it. So, but I'm hoping to avoid that by building up my after tax brokerage accounts a little bit more here in the near future. But
So
that's kind of a summation of my account.
So one thing about that, really quick, let's talk about on this brokerage account. So for those that are new to personal finance, or maybe you really are a little bit lost, let's just back up for a second. When we're talking about these three different buckets and different types of accounts, the pre-tax that Cube Crusher is talking about are retirement plans at work, basically. And for those that are small business owners, you may have small business retirement plans where you can also do some funds in there pre-tax, and that's beyond the scope of today. But the point is that the pre-tax money essentially is money that's going into retirement plans at work. And for most people, that's going to be your typical 401k plan. You put money in, you contribute a percentage of your pay. It goes into this pre-tax retirement plan. The money hopefully grows nicely for you over a period of time. And ultimately, when you take it out, presumably in retirement, you'll pay taxes at that time based on your ordinary income tax rate. So that's what we're talking about when we say pre-tax. Roth, you can check out the last episode on Roth IRA basics to get a crash course on that. But in a nutshell, after-tax money in, play by a couple of rules, tax-free money out to your face later. And then the brokerage account, and by the way, the Roth IRA is not through an employer. So that's an individual retirement account that as long as you have earned income or wages, you can contribute to. There's some income limitations and some other factors. Check out third episode on Roth IRA basics if you want all the rules on that. But that's the tax-free bucket. And then finally, the brokerage, and I wanted to come back to this, is an account that you can start. Some people call it a taxable brokerage account. Some people call it an individual account. It's basically just an investment account that is not a retirement plan. It's not a 401k. It's not a Roth IRA, but it's an account that you can start, and you can pretty much put money in there from any source. So it doesn't matter if, let's say, somebody was retired and they had pension income or even Social Security retirement benefits, they could still be investing. If you're working and getting a paycheck and you just have some cash that's lazy and you want to put it to work, you can use the account for that. So that's an account that anybody pretty much can use, and there's no limits on how much you can put in. The taxes work a little bit differently. I might have Cube Crusher touch on that, but if not, we'll save it for another day. But the thing I wanted to get to on the brokerage account is there is a little bit of risk, right? So you could have money in a brokerage account. You could choose to intentionally have less money in a liquid savings, or I know you don't like savings, but checking account. We'll come back to different types of checking accounts that we can talk about. But talk a little bit about the risk there. Like if you have money in a brokerage account and if you don't have a lot of cash and shit hits the fan, you have an emergency, what is the downside and what's a potential alternative to accessing the funds? And I think you know where I'm going with this.
Yeah, I mean, I guess the downside would be the market tanks, you shit your pants and you cash out at the bottom. I guess, one good thing about that is that you get to deduct $3,000 of tax loss if you lose a lot of money. Um,
Don't
but
do that.
but
Bad
going back,
strategy.
it all kind of though to me, as far as saving in the brokerage and keeping your bank accounts low, is it all goes back to what your savings rate is. If you're only saving 5% of your salary, then you're probably a little bit screwed as far as keeping your cash balance low. If you have a huge savings rate, basically you can float any expense on a credit card until the next month and you'll still be able to pay it off. That's kind of how I view it. If I got into a huge bind of some crazy sort with my brokerage account, there's also a way to access your funds and not create a taxable event as far as selling your shares or whatever the hell you hold in your brokerage account. You can actually take a loan against those. Some people, including myself, have taken loans against it to invest in other things, but you could always just take a loan against it to cover expenses if you needed to. And that is, like I mentioned, it doesn't, well, this is not tax or legal advice, but typically it does not create a taxable event, that you have to sell shares or anything like that. You would still hold any stocks, bonds, ETFs, whatever in your account, and you would just be able to get some cash off of that account. Obviously, there's going to be an interest rate associated with it, but pretty much, that's a way to get available cash and keep all of your money invested in the market.
Yeah, no, that's kind of what I was alluding to. I'm glad you mentioned that, and we'll probably go into depth on that on another episode. I am planning on doing an episode on collateralizing assets and doing an episode on liability management, and it kind of beyond the scope of today. But the point is, to Cube Crusher's point, if the market were to crash, as opposed to selling your investments at a significant loss, and even potentially at that, you could still be creating a taxable event depending on what your cost basis and all that stuff is. But you could essentially collateralize it, take a loan against it for a short period of time, and generally that's an interest-only loan, no credit checks, no paperwork, click a couple buttons, no major bullshit to jump through, and then with your huge savings rate, just plow that right back and barely pay any interest anyway in the following month. If like everything went to hell in a handbasket, that's not like the plan necessarily, but there's I think merit to considering that as part of your strategy, especially when you look at, and we'll cover this on the other episode probably, the likely upside and the arbitrage, positive financial arbitrage that you're going to be creating by doing that. All right, I don't want to spend too much time on that, but I did want to just mention that there is a risk there, so tread with caution. But everyone's risk tolerance, I guess, there as far as how much you keep in cash versus how much you keep in investments that are accessible is going to vary. Talk to us real quick about, you mentioned you don't like savings accounts and you like checking accounts, and I think you're probably talking about things like high yield checking accounts, and no free ads on Real Talk Personal Finance, so you don't need to plug any particular organization. But can you conceptually just talk to us about what a high yield checking account is and how you use it?
Yeah, pretty much what most credit unions is what I've found that offer these, but they'll make you jump through a few hoops, make you take out a credit card with them, spend so much on the credit card, swipe your debit card so many times, direct deposit money in, but they'll actually give you a decent rate of interest, even though your money is still going to be crushed by inflation, especially with the current 7% inflation that we got. I'm able to get, 4% on cash that I have sitting around because I'm willing to jump through these hoops. And you can probably just Google it, and there's a million different credit unions out there that offer these type of deals, but it's way better than a savings account, which I honestly don't know if I've ever even had a savings account because I don't get the point of them, to be honest with you. I think a lot of people like will name them something like a vacation fund or whatever, and then slowly transfer money into it. That's just not my style. All mine just goes into there, and if I want vacation, then I'll spend it out of the bucket and at least be getting some interest along the way, as opposed to the 0.01 that big banks are giving you. Or I know there's some savings accounts out there that may be able to give you 1%, which is quite a bit lower than 4% that you can get on these high yield checking accounts.
Yeah. And every organization that has these types of accounts is going to be a little different. Some of them will call it high yield, and it's actually, like I said on one of the other episodes, dog shit. And other ones, it's actually legitimate. So you need to make sure you check those out carefully. But a lot of the requirements, like Cube Crusher just mentioned, it's simple shit like, hey, can you get e-statements? Well, I don't need you to mail a fucking statement to my house, right? Just give me an e-statement. Check. Okay, fine. Check, right? Direct deposit. Well, if you get paid once a month or every 2 weeks or whatever it is, you have at least a portion of your paycheck go into that account. Boom, that one's checked. So it's not, sometimes you'll have to take out a credit card and have to swipe your debit card so many times, but it's not something that's going to be overly complicated. Okay, keeping it simple. So I know even though some of your strategies are somewhat complicated from a tax angle and a planning angle and all that kind of stuff, can you talk a little bit about your overall approach to finances? And I know there's some things, we'll probably do an episode on travel rewards and travel hacking, and you and I joke about this very often. It's not something you want to mess with, so you don't. And that's fine. Everybody's approach is different. So as people are listening to this, there's some things that you might hear that hopefully resonate with you. Feel free to take those and run with them if you want. Some other things you're like, yeah, I'm not going to mess with that, so don't worry about it. But can you talk to us a little bit about your overall approach from a keeping it simple standpoint?
Yeah, there's a lot of different investments, I guess, that are out there, or I mean, there's a million different things that people can invest in. But kind of how I look at it, and keeping it simple is, as I kind of mentioned already, I don't keep a budget. It's not worth my time to keep a budget, quite frankly, because I'm probably not going to follow it anyway. And I guess most people out there probably don't follow whatever budget they create. So I keep it simple, I guess, on that end of it. And then as far as investments, there's private investments that you can get into and all kinds of stuff. I just keep my accounts pretty simple, as I mentioned before. I have retirement accounts, non-retirement accounts, and I mostly, well, I think all of those are just in stocks. I keep it simple on that front. I forget about them sometimes. I invested in a couple of these real estate funds that send me money every month or whatever. I know that you're big into buying real estate. You have like however many different bank accounts you have to keep for that and everything. And to me, that's just that's just too much work. I don't want to deal with it. Investing in the funds is pretty easy. I send money and then I get my return sent to me, and just keeping things simple so they're easy to lay out, and I'm not forgetting that I got money somewhere that I forgot about, more or less, as opposed to getting into real estate syndications and things of that nature that can offer you high cash flow, but they also muddy the waters, and you start getting these different tax forms that you're not used to. So I keep it simple because I have a pretty simple brain, and it just fits with what I want to do and the amount of time that I want to spend on different investments.
All right. So coming into the last few bullet points here, I'm kind of jotting some things down as we're going. So I've added a couple. Maximum flexibility with future work. You mentioned pushing carts at Costco, and I think that there's some element of truth to that, but it's somewhat facetious at the same time. And you can't just work for the chicken bakes. So talk to us a little bit about there's just the general structure of your work week now and how you see that changing later, and redefining the word retirement, because some people are going to hear this and say, well, this guy Cube Crusher thinks he's going to retire at 40, but if he's pushing carts at Costco, he's pretty much the same as working at Walmart, and he's not retired, is he? So to those haters out there, can you just elaborate a little bit on some of those items and paint a picture for us?
Yeah, I mean, my ultimate goal would be, at 40, to not have to work, which at that point would be considered retirement, I guess, to me, because if I was getting any income, it would be something that I want to do rather than something that I have to do. I kind of have to show up to the office these days and work my 40-hour work week in order to get my paycheck. Will I quit working completely at 40? Well, probably for a while at least, and enjoy my years, maybe travel a little bit and not have to worry about working. But then, is it possible that I'll get a job working from home or a part-time job just to have something to do because I get too bored after several years. So to me, that would kind of, everybody says to, find a job you love and you'll never work a day in your life. Well, I honestly don't know if there's a job in the world that I would love. I'm kind of to that point of my career that the job I would love would be doing whatever the fuck I want to do every day. But that's kind of why I would consider it, at least a partial retirement at that point.
So what's the strategy for that? People are probably wondering like, all right, this guy's going to travel multi years for vacation or whatever. He's retired at 40. Maybe he gets a part-time gig and, works at Starbucks or pushes carts at Costco or whatever he decides to do later. But do you have as much as you're comfortable sharing, and if you're not, that's okay. But is there a dollar, like a numerical goal as far as asset or net worth, and is there an income goal? I know you keep your expenses low, so you probably don't need a cool million or McMillion in income every year. But do you have any concrete numbers or ballpark numbers that you can share with the listeners in terms of what that looks like? So you're 40, boom, you leave the cube, you crushed it, hence the name Cube Crusher. Now you're going to retire for whatever it is, 1, 2, 3 years. Paint a picture for us. Where does that money come from? What does that look like?
So ideally, at least for the first few years, would be from the brokerage account. Probably there's possibly I would not even need any income. I'll probably build up a checking account, maybe the savings account that I said makes no sense, just to have some more liquid cash at that point, because I'll want to have actually an emergency fund then, because when I have no income, I'll be shitting my pants a little bit, wondering what's going on. I don't know if my wife would still be working or not.
I think that's called
So
Wi-Fi. I've heard Wi-Fi before. You send your wife to
there
work
we go.
and you don't have to work. Yeah.
Yeah, there we go. That sounds good. So there'll be several different options. One thing I've started doing recently, actually, and I'm about a year into it, is trading options on futures contracts, which is gets pretty complicated. It's not for the faint of heart. You can lose your ass pretty quick, or you can make some good money pretty quick. But I'm kind of learning how to do that. It has been pretty profitable. So, I'm hoping to be able to continue to do that for, at least a portion of the income part to replace that. And then, as far as these retirement accounts, like I mentioned, doing these Roth conversions to get the money tax free from pre-tax to the Roth,
We may
and
bring
not
you
pay
back on the
taxes
show
on
for
that.
that, by the way. We are going to do an advanced Roth IRA episode, and we're going to cover backdoor Roth and conversions. We might bring you on. We'll see how that goes. But yeah, you might be back to talk in more detail. Continue.
Yeah, so and then there's a 457 plan, which I'm sure you'll discuss at some point, that my wife has, that is actually a retirement plan, but as long as you're no longer working, you have access to those funds. So that's another source of funds, if we're both not working, that we would have access to, and hopefully be able to get those out tax free, since it's a pre-tax bucket. So there's several different buckets. Right now I don't have a set strategy or a set number saying, hey, I need to see, this amount of money in these accounts and this amount in those accounts. It's going to be more of, I guess, get a feel for what expenses are looking like at that point. Hopefully, I continue to have some success trading futures. This month has not been so hot, and can supplement some income with that, because quite frankly, you can do it anywhere in the world. All I got to do is get on an app and click buttons,
You can do
possibly
that
make
from
money, possibly
you can
lose
do that from the
money.
cube, right?
No comment.
Yeah, right.
But yeah, so there's, I don't have a set number for anything right now. It's just going to be a feel thing. And you know what? Worst case scenario is, if I have to end up going back to work, then I go back to work. I don't think that will happen. I won't more than likely put myself in position to have to do that. But, if it does, then it does. And at least it was worth a try to not work.
Yeah, well, it's people have said on other podcasts and stuff before. Your worst case scenario is everybody else's everyday reality, right? Like they have to get up and go to work, and if you decide to take a little hiatus or mini retirement, and it turns out you have to go back to work, oh well, right? I mean, as long as your skills are still in a place where they're marketable and you can get paid something for what you're doing, which I'm sure you will be able to, especially with accounting, then there's probably almost always going to be a job for you. What about health insurance? A lot of times that comes up for quote unquote early retirement. What is your plan for health insurance if you were to retire at 40?
Yeah, well, if the wife is still working, then I'll be on her plan. Other than that, I have studied it some, obviously not real thoroughly because I'm not quite to that point yet. But there are ways, and I know some people get a little pissed about it, but there are ways to get government subsidies and basically not pay a damn dime for your health insurance. You know, if you have money in the right accounts and you can control your taxable income, there are ways, I believe, to even get it fully subsidized by the government. And like I said, some people think that that's the wrong thing to do if you know you have a million or multi-million dollars worth of accounts and you shouldn't be getting your health care paid by the government. They make the rules. To me, all I got to do is follow them. So if I'm following them correctly, then that's one option. You know, other than that, I guess, you know, I off the exchange like people do right now that don't have employer plans. I do have an HSA, and I know you had an episode about those that I continue to smash money into. I pretty much invest the entire balance of my HSA because, at least as of now, I'm healthy, you know, and I'm hoping to get that to grow over the next several years. So I'll have that, you know, hopefully a good chunk of money there available to me, you know, to help with health. Not necessarily the insurance part, but, you know, if something were to happen.
Gotcha. All right, two more bullet points here, and then we'll kind of wrap it up. We're at about 43 minutes. Any thoughts on estate planning?
Well, I currently have no will, which you're probably going to yell at me about, but I don't have any kids. You know, obviously the beneficiaries on our accounts, that's something that we make sure that we have our beneficiaries correct, and we do both have life insurance policies on each of ourselves. Outside of that, really haven't done any other estate planning on our end.
We'll see if we can hook you up here at Real Talk Personal Finance. Maybe we'll cover the cost for you for being a guest on the show. All right, last bullet point I have here is any advice for the listeners out there. This show, at least in my mind, and it is a brand new show, but the way that I see it is this is pretty much Real Talk Personal Finance and just general entertainment and education for sort of middle class America, people that are interested in personal finance, but maybe they're not quite at the sophistication level yet where they know about all the different aspects and different types of accounts and different strategies, or maybe they do and they just kind of want to brush up on some things or hear some different perspectives. But I think for most people listening to this, they're probably not as far along as you are. So do you have any general advice for anybody listening to the show today that is just getting started on their personal finance journey?
My advice would be to obviously start saving now, not saving in a savings account. I guess I should call it start investing now. Most people are way too conservative with their investments and with their savings rate. I think that, you know, you have to start saving as soon as possible and start investing that money because the longer that you wait, the slower that it's going to build for you. I think that people around our age, their parents were all nervous of the stock market, nervous of different investments, and therefore they kept a lot of money in the bank. And that's kind of how we were raised. But you know, I've kind of seen things differently than what my parents did, and just start getting that money invested, get it in the market. You're going to lose your ass, trust me. I've lost a lot of money to most people, but also know that in the long run that you're going to end up ahead as long as you get those investment accounts and you start building them up as good as you can. And then the other thing that I would say is take control of your own finances. There's so many people, even clients that I met with back when I was a financial advisor that had no fucking clue where their money was, how much they had, what it was doing, what the hell it was invested in, or what was going on. So, you know, if you haven't yet, go look at your accounts and see what you've got. If you do know, then, you know, just keep an eye on them. Know and take control of your finances, or you're just going to be lost. And in the long run, you may think that you have one thing and you may think you're invested in the market, but you're in some fixed bond fund that hasn't grown for shit. So, you know, really each person needs to take control of their finances and learn these things, you know, and being here on your wonderful podcast is one way to do that, or the first step, you know, try to learn this shit financial advisors make it confusing. The media tries to make it confusing, but it's not that hard, and you can make it even more simple than I do.
Yeah, there's some of us that try not to. There's a couple good ones out there, but yeah, I mean, I would totally agree with that. I used to give different talks, and I remember talking to a college class one time, and I said something about, because money's really not the goal, right? Money's a tool to be able to do what you want to do and get you where you want to go. But I said something about, money is essentially the lubricant of life, and you can go through life without it, but it's a pretty rough ride. And a lot of the college kids, it took them a minute, but they got a kick out of that. So I think that's absolutely true. Again, it's not the goal, but it is a tool to get you to where you're trying to go so that you can live the life that you want to live. All right, with that said, those are all the bullet points that I had before I close out today's show. Cube Crusher, do you have any final thoughts or anything that we didn't cover that you want to make sure we mention on today's podcast?
I don't think so. Just keep stacking paper.
Keep stacking paper. All right. Well, thank you again, everybody, for listening to Real Talk Personal Finance today. Again, we will start to compile a list of questions. So we're going to do a Q&A show coming up at some point in the future. If you have a personal finance question you'd like to submit and possibly have read and answered on one of the upcoming shows, feel free to send an email to realtalkpersonalfinance@gmail.com. Again, that's realtalkpersonalfinance@gmail.com. You can use your real name, use a fake name, whatever you want to do, have some fun with it. And then finally, if I didn't mention this already, shameless plug. If you feel like we earned it, please consider leaving a 5-star review and rating. It is a brand new show. We do this to have fun, but we also do this to try to help people. So if you wouldn't mind, feel free to go ahead and leave a 5-star review and rating. We would greatly appreciate it. I think that's all we have on today's episode. Thanks again to Cube Crusher for coming on and just crushing personal finance with us. This is the Cash Flow King. We will see you in the next episode.
Check the mic and make sure it sound right, boys.